All right, everything looking good. We are live. Somebody let me know in the chat everything is coming through loud and clear. Go ahead and get this stream started. Welcome back to the channel. Crypto Trend Trader with our midweek market update. It is 8 p.m. Eastern Standard Time on October 5th, 2022. And like always, before we jump right in, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, welcome everybody. Milligan in the chat. Appreciate you, brother, coming through loud and clear. Yoda, hey, good to see you, Yoda. Hear you, I do, clear and loud. Triple Dumps in the house says good to go. All right, sounds good. So if everybody's good to go, I'm good to go. Let's get it going. So obviously we saw a little rally over the last couple of days. We talked about it on the Sunday stream. We had the end of the quarter, the daily, weekly, monthly, and quarterly all coming to a close. Coming into our fourth quarter, we talked about some bullish and bearish case scenarios, and probability of each playing out. Talked about a Christmas rally and what that would look like, what that could look like if we saw a little rally now and a better rally later. If we saw a little rally now and nothing later versus, a little downside now and then a rally later. So there's plenty of situations that could play out. Typically, the longer the duration time frame that's coming to an end, in this case, a quarterly or even a monthly, is very substantial. We saw a big pivot for the 6 month, the end of the first half or end of the second quarter. We saw a big pivot for that last rally. It didn't even last the whole quarter. Sold back off, new lows right around the end of the quarter again. And now here we are. We're talking about, if we rallied in many cases 20 to 75, 100, 200%, some of these ones that have just, sold off massively. If they rallied that much and then gave it back in most cases to new lows in one quarter, I mean, we could see complete fireworks this quarter. So there's going to be opportunity. We're coming into, essentially what looks like probably going to be a divided government, which is always good for the markets. That is bullish. We're seeing a couple of central banks already, go from quantitative tightening to some sort of demented version of quantitative tightening and easing at the same time. Obviously, if you're chugging water and taking a piss at the same time and you're trying to lose weight, you're not going to lose weight if you're chugging water. It's going in one end and out the other. That's basically what like the Bank of England is doing. They're trying to lose weight by drinking water and taking a piss at the same time. But if you're drinking as much as you're pissing, you're just going to end up in the same spot. And, there's no way to specifically quantify bond buying programs versus, rates versus, any other form of distortion. The most important thing is the distortion is going on. And the distortion is what has led to the inflation. Therefore, if the distortion is still going on, expect more inflation. Therefore, the rally we recently saw in the UK, to me, looked like a dead cat bounce before further lower downside. I mean, yeah, it's great that, you got, here, just think about rationally what's happening right now is the markets are rallying because of a potential pivot. The potential pivot is because something broke in, England and, obviously Japan recently as well, or UK, however you want to talk about it. So we see stuff breaking. That's obviously not good for like the future or the economy or just anything in general. So the reason it's good for the markets is because that means we're closer to the pivot. Even if it's not about to happen yet, at least it's the first step in the right direction. Something's breaking, therefore the central banks have to acknowledge stuff's breaking, therefore they're more likely to potentially pivot in the future. That's it. That's the whole thing. The problem is, why would the pound rally? Why would the pound gain value compared to any other currency? They're basically saying while everybody else is fighting to quantitatively tighten the most, or at least just keep up with the United States, which is why the dollar is strengthening, because most countries aren't keeping up with the United States in their tightness. So because of that, it draws money to the United States and makes the dollar stronger. So ideally, other countries would just tighten as well to keep up, and then all of our currencies would stay relatively valued to each other. But that's not happening because the other countries aren't keeping up. And England now is not keeping up, or UK, because something just broke. So now they're not only doing quantitative tightening by raising rates, they're also doing quantitative easing by buying bonds. So they're doing, they're doing the same thing, fighting themselves. It's like holding a rope around a pole, holding one end of it in your left hand and one end of it in the right hand, and then trying to pull the pole towards yourself. The harder you pull with your left hand, the harder it pulls against your right hand, and vice versa. You're not getting anywhere. You're fighting yourself. And that's what they're doing. So what does that mean? That means that the reason everybody is tightening is to stop inflation. So if they're tightening now and they're loosening at the same time, it means they're essentially doing nothing. So they're back to neutral, which means if everybody else is tightening and they're not, because they're back to neutral, that their currency is going to go to shit. They're going to continue to see inflation higher relative to other countries. So what we saw recently in the UK, in the pound sterling, dead cat bounce, in my opinion. We'll see what happens over time. Complete dead cat bounce, in my opinion. I think it's going much, 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 much lower, especially as we go into winter months. But anyway, we'll see. So the whole entire rally, everything we saw recently, is predicated on the idea that as things are breaking in other countries, the more important the country, if it's Sri Lanka, no offense, I'm not trying to hurt anybody's feelings, but nobody gives a shit. At least nobody that matters. If it's UK, well, might start paying attention. If it's, United States, obviously that's the biggest deal. So, and then there's obviously a lot of shades of gray in between there, but doesn't look to me like this is going to cause any sort of pivot short term from the Federal Reserve or anything like that. I really don't see it coming. I don't think that that's going to happen. I think over time, sure. But in my opinion, if we see continued weakness in the US dollar, this should be an opportunity for people to de-risk, get away from that short dollar trade. But what's actually going to happen is the opposite. People are going to think it's stopped, and then that's going to be probably the biggest short squeeze of our lifetime. But that being said, let's jump into some technical analysis. All right. Sorry if I just, whatever a burp and a hiccup combined is, into the microphone. But also, if you're into that stuff, you're welcome. All right. So TNX up here at 3.760. We saw some weakness. We lost the 8. We back tested the 21. Our target was slightly lower, but the 21 is acceptable. Obviously, we were looking for a back test of previous resistance. As support, didn't quite get there. We did bounce back up and reclaim the 8. And then we closed a moderately strong candle after that. If we're looking at just a daily right here, we can see we had a move down, we had a little bounce, and then we had another move down, and now we're in the process of another bounce. So what you want to see is one of two things. If we take out this high right here, then we look at this high right here and say, okay, we're going to continue the uptrend off of support. If we continue down here and put in another lower high, we have a high, a low, a lower high, a lower low, a lower high. We would expect a lower low, a breakdown from our 21, and then likely to get that retest right around 3.5. Obviously that was a very important level right here at 3.265, as that was our previous all-time high from before the Rona dump. So that is a very, very key level. That's our top fib level right here. Not crazy to think that we might come back down, to that level. That was obviously our little head and shoulders kind of channel thing going on here. There's quite a bit of price action in this range. What you would expect to happen is we trade inside a range, a channel, whatever for a while. We break out of that range. Eventually we hit resistance. We come back down. We test that range that we broke out of now as support. So I would expect an SR flip, what was resistance, come back down to it to act as support when we do. Somewhere around 3.27. We don't have to get there. Maybe we stop right here at 3.5, etc. Looks good to me. The longer the yields hang out at this level and just go sideways or just kind of trend down a little bit while this rolls over, and we see all this exhaustion working out of the pipes, the better that is for yields for continuation rally. We can't just go straight up forever. So we got the hard sell signal. We left the bullish control zone. Obviously, we talked about the retest of the 21. We talked about a potential bear cross. We talked about some of these other levels. Has to happen eventually. We can't just go straight up forever. We run out of energy. So we started to run out of energy up here. We spent quite a bit of time. This whole rally, we were in the bullish control zone. So people say, oh, we're overbought. So if we're in the bullish control zone and now people are like, oh, we're overbought. Well, what happened after we were overbought? We went from 3 to 4. We went up 33% after we were quote unquote overbought. So, pardon me when I say I don't really give a shit about overbought and oversold. I look at it as the opposite. Like people say, we're in the bullish control zone. So, you know, we're overbought. We're at these extremely high levels. We're above 80 on the RSI, whatever. I look at it the opposite way. I say, okay, look, there's a big neutral area in the middle where nobody's in charge and they kind of battle. But if we're below 20 or above 80, somebody's running the show. I mean, it's not like a little fight going on and we're kind of trending up or kind of trending down. If we're in a longer time frame below 20 in the bearish control zone, we call it the bearish control zone because the bears are in control. The bulls have not even been able to defend the goal line. You don't just let, you know, if you're playing soccer, you don't just let your, you know, opponent's forwards just kind of hang out kicking the ball back and forth like against the goalie. No, the defenders step in and do something about it. Well, you know, when you're below that 80 or above that, or I'm sorry, below that 20 or above that 80, I mean, you're like one-on-one with the keeper at this point in time. You know, you're at the goal. This is it. You're ready to take shots on goal. The defense comes before that. The goalkeeper is not the defense. The goalkeeper is the final straw, the last line of defense. You know, and that's what basically like above that 80 or below that 20 is. It means the last line of defense is the only thing left at this point in time. All other defense has failed. So when I look at this and I say, okay, the bulls have been in control for this massive 33% rally over the last few weeks up to new cycle highs. And then it's like, okay, we start seeing a couple red histograms. We start leaving the bullish control zone. We get a hard sell. It's like, of course we expect this to cool down. So the question is going to be, do we see a deep retrace and start losing key levels and start wondering about the health of the trend overall? Or do we just kind of trend sideways to down while the indicators, oscillators cool back off and then we just get ready for the next leg of this journey? And you guys obviously know how I feel. You know what I'm expecting. You know, we are at an extremely, extremely key level. Every time we hit, this blows my mind. You know, I put all my targets out there in advance. I talk about trade setups. I talk about my entries, my exits, my targets, all that stuff. Some of these targets, I mean, years in advance. We've had this 618 in place for literally years. So, you know, or something like the Apple trade where we have a target for the Apple trade, you know, for our short to take profits. You know, when we had these targets in play, expect that I'm not the only one taking profits, or the group is not the only one taking profits, that there's a large group of other people doing the same thing that we're doing. And if they're doing the same thing we're doing, when we hit those key take profit levels, we should expect bullish price action or bounce or whatever, you know, counter to the trade that we're in. Because, you know, obviously if you're short and then you want to close that short or take profits, you have to buy long. So if I'm a seller the whole way down and then we hit a target and then I become a buyer at that level, and then you're trying to go short at that level, or you're surprised that all of a sudden we're seeing some kind of bounce. Now, we don't know if that's just going to be a quick little dead cat bounce. We don't know if it's going to be a little rally. We don't know if it's going to be a trend reversal, but you expect to see a bounce because you know I'm buying, other people are buying, people are taking profits. So that's why a lot of times we see these the same way we would expect at a take profit right here. Anybody that's been long the yield the whole way up here, you know, we're at the 618. We're at a massive key take profit level on this chart. I mean, if we look back, that's a very important level from our all-time high to our all-time low. 61.8% retrace is very, very important. We know that, obviously. If we break through this level, the next target based on just Fibonacci's is 7.18%. Okay? And I mean, you could call me the master bear or the master bull, depending on if we're talking about dollars or yields or, you know, equity markets. But the fact of the matter is, that's not even my target. My target's here at 5.2%. Okay, so if we're just looking at Fibonacci's and we're saying, okay, well, from here, one of two things is going to happen. We're at a pivot point in the market. We either pivot and continue up, or don't pivot, however you want to look at it, continuation, or we pivot and come back down. So if we're going to continue up, the 786 is a target. That's 7.2%. Now, obviously, we would take a stop at, you know, roughly 5%, my next target to upside. But if the next targets are from 3.7 to 5, and then 3.7 to 7.5, what does that look like for risk on assets? What does that look like for the markets? What would the stock market look like if you woke up tomorrow and we're 9 months in the future and interest rates on the 10-year yield are 7.1%? What is the you know, S&P going to be valued at? What is the multiple going to be on the S&P, or just the overall, you know, dollar value? You know, just think about these, do these little mental exercises, and then think about it. And then what's the opposite? Well, what if we fall down here? What if we go back to the 0.5? You know, and then who knows, maybe go down after that, maybe go back up. But what if we go back down to the 0.5 at 2.5? Well, it's not that hard to imagine what prices look like at 2.5 because we were just there. So it's not far off where we're at right now. So the risk for me is the 7%. I mean, if we see 7%, it could be catastrophic for the markets. Things would be breaking left and right. It'd be insanity. I mean, 5% is already pretty crazy. So that presents the highest amount of risk is if the insanity or the craziness or just the, unthinkable situation should happen. And that for me, that's to the upside. That's 5%. That's 7.2%. That's, 20%. That's whatever your worst case, whatever scenario is. So, and then we look at the best case, bull case scenario. Let's say, okay, bonds are going to rally from here. They're going to rally till the end of the year, and then we'll see what happens after that. Still a bad year for bonds, but hey, at least they finish strong. Yields are going to fall back down. We're going to come back down to this 2.5 level, blah, 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 blah. I mean, what does that do to valuations? How much higher is everything? Everything's what, 5% higher, 10%, 20%? Dow Jones is back up, 25%, retesting all-time high. I don't know. I think all the risk right now is for risk on equities to the downside when we look at a chart like this. So now percentage wise, if you talk about the difference between going from 3.7 to 7, we're talking about 100% move to the upside. If we're talking about going from 3.7 back down here to, 2.5 or 6 or whatever, we're talking about substantially less. I mean, still a big move for sure. Still a big move for sure. But, the difference between 33% and 100%, all the risk, in my opinion, is that this thing continues to the upside. So we'll see what happens. Obviously, we don't know. Maybe the inflation number is going to start coming down. Labor is going to cool back off. We're going to start, seeing this legitimate pivot, I guess. I mean, we'll see. Still a very, very strong trend with a confirmed breakout. It's difficult for me to even begin getting bearish on this. Obviously, we saw some of this weakness has led to a nice little rally in the assets. And then the little pop we saw over the last couple of days did not necessarily get reflected in risk on assets. So we're starting to see a 1 or 2 day divergence. So TLT is next on the daily. Obviously, we see it down here at the lows. I mean, there's no sign for me right now that this is bottoming. If you look at this chart right here, there's a million times along the way when we could have said, oh, this is going to be the bottom. I mean, there's tons of people trying to call the bottom the whole way down, and they were just wrong, the whole way. And we were able to identify those various swings, the low right here and the high right here. I don't see any of the signals that allowed us to, identify the double top, the bullish divergence, the bearish divergence. I don't see any of those signs that allowed us to identify those points right now. I mean, the only thing that we have working for us right now, in my opinion, is this little itty bitty little tiny support level. And it's like, oh, okay, that's cool. So we're bouncing that. It makes sense, right? We bounce a key support level. That was the one we've been watching for. We hit the measure move on these. So, maybe we do get a nice move up here. How's that going to reflect in yield? What's that going to look like in asset prices? Just those mental exercises. So we saw Dow Jones bounced up through the 8. We closed at the 8. We shot straight up to the 21. And then we did nothing today. We closed up here at the 21. And then we basically gapped down. We moved a little lower. We came back up. And then we closed at the same place again. So nothing changed. We just basically had a flat day. I mean, so we're at the lows. We bounce back up. We back test the previous lows right here. The next question is, are we going to break through those and then start back testing some other key levels of horizontal support, descending resistance, or I should say horizontal resistance, 200s, moving averages. We'll have to see a couple of green histograms, hard buy signal, leaving the bearish control zone. This just happened right here, and then we capitulated lower. We look for, signs that this might be potentially bottoming, at least short term. We see obviously a double bottom on the stochastics right here. We see that corresponds obviously with a much lower low on price action right here. So some nice bullish divergence. We don't see it on the TDMACD. Very important, obviously, to pay attention to that. And then just flipping out to the monthly chart, we see very clearly we had a very, very bearish monthly candle. You guys know what I look for, a back test of key levels, and typically like to see at least 50% of that candle go away. I want to see the bulls reclaim and close the bullish candle, somewhere up here. I mean, normally I would say 50% is key, which is right around where we're at right now. 30,000 Dow, it shows the bulls are at least still in the fight. Now, the thing is, though, it's been a couple days since the monthly close. Why are all of a sudden the bulls are here now? Did all the bears flip bullish? Is it because of the time of the year? Is it because of, the solstice? Is it because of, the Fed pivot? Or is it just the fact that the bears printed the tape, whooped that ass, and then the second the bears didn't really care anymore because it's going to be another, 30 days before our next monthly close, they just say, do whatever now. I don't care. Go ahead. The parents get the kids to do all their homework and their chores and their laundry and all that stuff. And then, all right, go do whatever the hell you want now. I don't care if you go eat, candy and play video games. You did what you were supposed to do. And that's how I look at this. The bears whooped that ass, closed the most bearish candle we've seen so far, and an 821 bear cross on the monthly. Just disgusting price action. And then they were like, okay, our job is done for now. We'll talk to you, 2, 3, 5 days before the end of the close. Go F off for the next 25 days. Do whatever you want. We'll take part in it too. We're going to close some of our shorts as well. Makes sense, right? Bouncing off key levels, maybe come all the way back up here, back test the entire monthly candle back up. People will start talking bullish again. And then what? Another rejection. We go much lower. I don't know. We'll have to see. But, we're looking for signs of key pivots. We see some stuff on the daily. Monthly still looks very bearish. But, the monthly as of the last couple of days, sure, it looks great. But why is there all of a sudden bullishness? Did something fundamentally change? Did something technically change on the chart? Or is this just a hopium rally? Is this just a dead cat bounce? Is it just that the bears, printed the candle they wanted on the monthly and now they can just chill out for a few days? I mean, any of those could be a factor. Are some people sitting on the sidelines trying to figure out which direction the pivot will be, just patiently waiting to enter? I know for sure there's people like me doing that. So SPY is next. So we put in lower lows on the Stochs here. We put in lower lows on the histogram here. So we don't see any of that, potential bullish divergence we were looking at from any of our important points right here. We backtest the 21. Obviously, we have some other key levels. We're backtesting the support we broke through. And then if we flip over to the monthly, again, we see the bulls failed to do anything about this monthly candle. Not only did they fail, when the monthly closed, we were at the lowest low of the entire month. So the bears were still kicking the bulls' ass the entire time. And then finally the bears stopped playing. And the bears are like, okay, that was fun. They're over there eating orange slices and drinking Gatorade. And this is how many points the bulls are scoring, with no bears playing the game at all. The bulls are just running around with the basketball, shooting free throws, trying to score some points. The bulls don't even care. They're the bears. They're not even playing. They're eating orange slices, drinking Gatorade. They're probably going to crack a beer mid-game because the bulls don't put up any fight. So why not have a little buzz, That's what I see when I look at this. This isn't, the bears didn't lose at the end and the bulls bought up the candle and printed a close above the low. No, the opposite happened. And what happened last time? The bulls completely got decimated, came back, when the bears gave them a candle up here, another rejection, just go lower. I would just expect continual price action like this the whole way down until something changes. And we're not seeing anything change right now, in my opinion. Triple Qs, we're looking at that little double bottom right here. Nice little pop back test at 21. We got the 382 above our heads, 236. And, this area seems unattainable right now. Doesn't mean we can't ever get there, but doesn't seem like we're going to be up here back testing the 200s again after we just did it. We basically had just part of the reason I don't really give any legs to this rally, and I don't think we're going to see any follow through. We just had a beautiful rally and then gave back the whole thing. The bulls had all the opportunity in the world to break through resistance right here and then just rip. If you're not looking at any fundamentals, pivots, any of that bullshit, and you're just looking at the markets and saying, okay, how close were they to flipping the fucking trend back bullish again? I mean, they were so close right here. So close. It wasn't even like a hard rejection or anything, like big candles up with rejection wicks and, just a big battle taking place. No, price action lazily floated up here. We took a bunch of positions down here, took a bunch of profits right here, and then we're like, all right, that was fun. Open some shorts up here, and then what happens? It just melts straight back down. And there wasn't even a battle right here. So even the bulls didn't believe in this trend right here. It was just a bunch of like me and you and everybody else scalping this little dead cat bounce. And then when it was time for actual bulls to come in and step up and the battle to take place, nobody showed up on the day. We got a general standing there with no troops. And the bears just tore them apart. Now here we are back at the lows, and now we're bullish because the pivot might happen. Because we're retesting the same lows again because we just put in a new lower low. Now we're bullish. Could it be a fake out, a spring, a push down, a breakthrough support? No, it would have went more than that, and we would have saw more of a rejection. You know, this little edge right here isn't just like taking out everybody's stop losses and like cascading waterfalls. It's more just people trying to pick the bottom. So like, oh, I didn't get a chance to buy the bottom here. I'll just buy it right here. Yeah, I mean, maybe you will. Maybe you will. I doubt it, though. IWM, Russell, again, same thing. Chopping around at the lows, fighting that 21. All the charts are trading the same. That's why lately, you know, when we've been taking some of these trade setups, I've been looking for a couple charts that look real similar with really nice, favorable trade setups, and then taking a couple of them. Because sometimes, I mean, pretty regularly, of our last, like, quite a few trade setups, we'll have like 5 trade setups going at one time or whatever. We'll discuss them on the channel. We'll talk about them in the trade group, et cetera, et cetera. At least one of those trade setups completely fizzles and does nothing. Like everything else is like moving and ripping and crushing, and it does like nothing at all. And then there's one that just absolutely outperforms. And then there's a couple other ones in the middle. So it's just a matter of making sure we catch those ones because we don't know. Maybe it's going to be Bitcoin. Maybe it's going to be NASDAQ. Maybe it's going to be shitcoins. Like, we don't know which one's just going to rip. So when we look for those nice trade setups, especially in different markets, we take a little stab at a few different ones. As far as the Russell, though, looks very weak. The daily looks okay right here for another pushback up, but just series of lower highs and lower lows. So what do we get out of the Russell? You know, we're going to come all the way back up to the 200s now and test them. I don't know. I doubt it. We'll see. So XLE at some key levels right here. So we got a nice bounce. We got our higher low, we got our hard buy, bunch of green histograms. We're coming back up to the 0 line, the slope line, the previous highs right here. So this is an important level. It's an important level. We need to, you know, obviously we have a high, a low, a lower high. Now we have a higher low. So the next big step would be to put in a higher high right here. If we can take out 84, that's going to start looking pretty juicy right here. We get up above that 886, we're going all the way to the top. If we go all the way to the top, you know, we're going, you know, basically blue sky, at least a cycle high. So when I look at this, you know, this is key level to get through. It's like 84. Utilities had a nice little bounce off of that support line, sold off pretty aggressively. Obviously, we know this is more of a safety trade. So utilities can suffer in a lot of situations. If we go back to risk on suddenly, utilities is not ideal because it doesn't really move that much. So that's not necessarily good for utilities. So if you're bullish on other stuff, you should be bearish on utilities. Well, if you're bearish on utilities, you think you're probably going to break through this. So what about the opposite scenario? Well, if you're bullish on utilities, it's going to find support here and pump. That means it's probably bearish for everything else. So is utilities at support ready to pump, or is it at support ready to dump? And then how is that going to look for other markets right now? Because we know utilities are going to do well when risk on is not doing well, you know, during risk off scenarios. So if we're in a risk on scenario, utility is not going to do well. So if everybody thinks the Fed's pivoting, utility is getting ready to fall out of bed. This is going to be a devastating dump, probably down here like 62. Or utilities is telling us the truth, and this like super strong support line we've had going back for, you know, a decade or so, this channel is going to hold up, telling us actually we're at support about to bounce, and probably risk on is lying to us. Now we don't know for sure, but we'll see. XLP consumer staples. Busted through support right here, back testing it as resistance right now. We have some fibs in place. We're paying attention to those key levels. Obviously, that was the bottom of our consolidation channel. We sort of front ran our target a little bit, the 382, and then also the pre-Rona dump highs. But that being said, yeah, I mean, it just looks like we broke through support back testing. If this starts to hold right here, this is really going to look like a spring. I mean, this is like textbook spring. You have a very, very clear support right here. You clearly break through the support. You back test it as resistance. You reclaim it. I'll be bullish on this back up to like 74. Now, you know, is that the retirement trade right here? I mean, is that it? No, it's like, you know, 4 to like 7%. No, there's nothing really there. But, you know, obviously, if we see the price action start to play out, it's going to correspond with more favorable setups on other markets or stocks or cryptos or whatever. So You know, a lot of times we look at a sector and it's like, well, you always talk about it, but we don't trade it. Well, because we're trading other stuff, we're using that as a gauge. It's just one of our instruments, one of our tools. So DXY obviously was a lot of the reason why we recently saw this little pump, this little Fed pivot pump. So, you know, obviously this was going parabolic as the pound was melting down, as the euro was melting down, just currencies in general. And then we saw Japanese central bank pivot, sort of, you know, buying bonds. We saw Bank of England pivot, sort of, you know, going into some QE, buying bonds, etc. So obviously that's going to give the idea now that the Fed is going to pivot. Because people are wondering, why would the dollar get weaker if Japan's central bank is pivoting? If England's central bank is pivoting, that should make their currencies weaker. Therefore, the dollar should go even stronger. But the market is looking past that, because that's the obvious result. Is, okay, you know, whoever doesn't keep up with the U.S., their currency is going to shit versus the U.S. dollar, because the U.S. is the gauge for everybody else to trade against, the most liquid market, the biggest market, you know, the most trusted, quote unquote, market, the most safe bond market, and arguably stock markets as well. So therefore, we're seeing the opposite of what should happen, because the weakness in those other currencies, you know, Japan, the euro, the pound, all these other currencies, is being trumped, no pun intended, by the thought of the pivot. Because if the pivot happens, the DXY would weaken theoretically, and then all, you know, asset prices would pump, and we'll see reaction rally in the markets. So the idea that those two countries or banks or, you know, currencies are melting down is less important to the markets, to the world markets, than the pivot, which makes sense, because obviously right now the inflation, the pivot, those are like top down list, and we just go down and way down, like after like 40 other things, you know, we finally get down to like Japanese central bank pivot, you know, UK, England central bank pivot, and then we go down another like 1,000 things, and then 4 more 1,000 things, and then it's like some shithole country that nobody cares about is like, you know, in full on like riots. Turkey's currencies going, you know, to zero. Like, no, you know, no offense. If you live in Turkey, I'm sure it sucks. If you live in Sri Lanka, I'm sure it sucks. But let's be real. Nobody gives a shit. Not in the markets, not the real markets, not anybody that matters. All that matters right now is this that we just talked about right here. So the real question now is this a reaction rally short term, or is this the macro top? Well, we can argue, and we've been arguing the whole entire time, that the macro top in the DXY is not going to happen until the pivot happens. And we're going to see a lot of other countries, you know, break, currencies break, you know, stuff in the system breaking left and right as the dollar strengthens. But the pivot is what breaks the dollar. The pivot is what changes this trend. So this is the thought of the pivot going on right here. So the question is, are we going to see continuation now, and that is it, and it really is the macro top, and it really is the pivot? Or did we just go nuts, and now we're just going back down before we go nuts again? I would say the latter. So, you know, looking at our indicator oscillators, you know, on the daily, but relatively short term, here we have a low right here. Here we have a lower low on the stochastics right now. No sign that it's reversing or anything anytime soon. But, you know, we can look relative right now. You know, we have some lows in this area, and then we have some much higher lows right here. So what is happening? We're using a bunch of energy to go down. You know, the stochastics are going down quickly. The histogram is going down quickly. And while that's happening, price action is not anywhere near the previous low right here. So if the histogram is already much lower than it was right here, by the time the histogram gets down to the bottom, let's say it even goes there, where's price action going to be? You know, we could potentially take out this low right here and then invalidate any potential bullish divergence. But if we don't, you know, we'll have clear bullish divergence. Here we have bearish divergence, call for the top of the trend, and it rolled over short term. And, you know, obviously that's counter trend. So some bullish divergence could lead to some serious continuation. Now we're below the 8, we're below the 21. They're close to the bear cross on the daily. Still well above the stochastics, but, or I'm sorry, the 200s, but that doesn't necessarily mean that we can't come back down and test them. As a matter of fact, that's a bullish retest of the 200s before continuation. So the real question is right now, is this the macro top, or is this just another top short term in the dollar? I would argue it's a short term top. You know, weekly chart, we have a massive bull candle. We have a potential, you know, topping candle right here. You know, obviously we talk about some of the candlestick identification patterns, etc. So this would be essentially a shooting star. We have a large rejection at the top of the candle and then a red body. And now here we're seeing follow through. What I'll be paying attention to, what will matter to me is once we take out this bull candle right here. If we take out the lows right here and break through like 109.60, we have 3 weeks worth of resistance right there. And then obviously that was our open and, you know, went pretty strong after that. So that's the key area I'll be watching for. 109, like 68 roughly. And then obviously we have some other layers below that. And then we also have this ascending support line. I have mine drawn from January and then again in May. And then we kind of stab through it a little bit on the weekly here in August. And then obviously, you know, we're still a little bit off of it as well. Lines up almost perfectly with where that backtest area would be, right around that 109.6 level. And then if we just, you know, obviously still in the bullish control zone, mostly green histograms, plenty of red histograms along the way as price just continues to float up though. Price is, you know, borderline going parabolic on the weekly, at least, you know, very aggressive uptrend on the weekly. And we still have this many red histograms. So the bears are fighting the dollar for sure, but they're losing badly as price just continues to surge. That's what I see when I look at these. You know, and sometimes you got to really just put things in perspective and be like, what am I actually seeing right now? So what happened? We blew through a key resistance. We smashed into another key resistance. And now what? We're back testing some levels? Makes sense, right? This was our target, our macro target. You know, 108, 110. Next one is up here at 120. Very, very important levels rating right now. What about on our histograms? All green, blue slope line, well above the zero. Beautiful. What about the moving averages on the monthly? 821 still bull crossed. I mean, we're so far away from them. Just even threaten the 8 on the monthly, we have to come down to 106. I mean, that's a ways down here. Bullish control zone. I mean, I just don't see a top right now in the dollar. Now, it doesn't mean it can't happen. It doesn't mean this doesn't turn into a top. You know, and I don't care. I don't have a vested interest. I'm not like, oh man, I gotta just be a proponent for the dollar. I'm just gonna all the time talk about how great the dollar. I hate the dollar. It's trash. I trade the charts. I don't care about any of that. Do not care, not one bit. So we'll see what happens right here, but I'm just not seeing it right now. The same people that called this the dollar top, that was 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 the dollar top. And I'm sure their portfolios reflect that decision. Or they're just not even traders and they're just talking. So Tesla, we talked about the Tesla trade. We said obviously the risk was to the downside. And obviously I told you I was not taking this trade specifically only because the Apple trade is still live and I'm not looking to, like, I'm not that bearish and I'm going to short like the only two good stocks right now. So, you know, 6.6% stop loss with a target all the way down here of the blue 236 or arguably the green 236 double bottom. That 38% downside, 6.6% stop loss. To anybody that took that trade setup, you would be already up from the entry to where we're at, like 18%. So not bad. Once again, you know, nailed the top on Apple, nailed the top on Tesla, plenty of other ones as well. Tesla and I arguably don't always have the best history. I mean, it's done me a lot of good in the past, but as of late, this trend up here has not been the easiest thing. It tends to do the opposite of what it should at the worst times. Yeah, anybody who jumped in that one, congratulations, or took profit. Microsoft is next. Obviously overshot the 382, reclaimed that level, very important. Backtesting previous support levels. You know, lots of bullish signs on the daily. We just were up here. So if we wanted to be up there, why didn't we stay up there? Instead, we went to new lows. So now we're going to go back up here? Maybe, I guess. Maybe we come back to the 236. and it acts as hard resistance this time instead of breaking through and hitting the moving average. I don't know. It's tough to try to build a bull case for these stocks with the current price action. So obviously we took profits on the Apple trade right here, getting a bounce. This to me looks like other people probably had the same trade and probably took profits at the same level. And this buying right here is people like me taking profits, not people buying Apple stock because they're like, I need more apples. Apples to apples. Am I right? Google, Alphabet came down to 382, reclaimed that level. So what's the target? What, we just start back testing all this resistance, all this support, as resistance? We come back up here to 236? I don't know what the bull case is for a lot of this stuff. I mean, I guess that's it, right? Just the same trade again? Could be, actually. Could be. Meta continues to just melt down. It's still at 138. I know my target for this week was 0, so I am off slightly. Yeah, I'm going to stick to it. So I think next week Meta will be at 0. I'm sticking to that one. Or at least closer than it is now. I'll stick to that. We'll keep it broad. Amazon still holding on very, very nicely at that 618. Beautiful support for now. Higher low. Very, very important. One of the stronger stocks on this most recent pullback. This is doing like the Ethereum where it's at least putting in a higher low. Looks like it could have further upside potential. A lot of these other charts don't even look that way. So, not like Ethereum's good or anything. It's obviously trash, but it's actually performing worse right now than Bitcoin is on the shorter time frames, which is crazy. So, what is going on? J Hoff says, crazy week. Let's do this. I know that's right, man. Yeah. Crazy week so far. I mean, a couple days. It's like, what's that analogy? Like a beach ball being held underwater. Like the last few days of the month, the week, the quarter. The last few days is like that beach ball being held underwater by the bears to print that nasty candle close to confirm that they're still in charge and we're going lower. And then, as soon as the close happens, you take like a snapshot. It's like a roller coaster ride. It takes a shot just at that one time. It doesn't show if you had your hands up the whole ride or your hands down the whole ride or if you were crying or, what your face looked like the whole time. No, it takes one snapshot. So that was it. The snapshot is the bears holding a beach ball underwater. And then as soon as the snapshot's over, the beach ball just jumps back up into the air. That's what I see markets doing right now, in my opinion. So, what's up, Parag? Good to see you. What's happening, everyone? Good stuff. Yeah, that's right. Smash up those likes. Remember, this is not financial advice. Not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. So let's look at Bitcoin now. So Bitcoin did some important stuff here. We're actually going to go down to our shorter time frame, and we're going to look at Bitcoin on the Bitstamp chart on the 4-hour time frame. So we've been back testing the 200s multiple times, and they've been kicking our ass, rejecting us continually. And then here we broke above them. We back tested them for support, and now 200 exponential and simple are blue. That's a 4-hour bull trend started now. Last 4-hour bull trend was pretty nice. Arguably, depending when you got into it, probably somewhere around here when we confirmed, to when the 821 crossed bearish or to when it crossed back down, you're talking about a 12 to 6% move, depending, if you bought the worst opportune time and sold the worst opportune time, 6% move. So nothing to write home about. Could we get an equal move right here or a bigger move right here? For sure. So we're paying attention to that. The way I'm looking at this setup currently is we have very clear, resistance support level back here around like 28K. And we have very clear support down here around 18K. So from 18K to 28K is our range. So about 10K. So anytime we're down at the 18K level, we should be buying support. Anytime we're up at the 28K level, we should be selling resistance. Arguably 25K, pretty important as well. So if we're at 20K right now, it's 2K downside to support, and then it's 5K upside to resistance, possibly 8K upside to resistance. So anybody can say, well, 2,000 down risk versus 5,000 up risk. That's 2.5 risk reward. Or 2,000 down risk versus 8,000 up risk. That's 4-to-1 risk reward. And then evaluate, obviously, accordingly. Now, the 4-hour is looking a little tired here right now, but nothing to get too scared about. When we flip back out here to the daily, we see now that corresponds, reclaiming the 200s on the 4-hour corresponds with the 821 bull cross on the daily. Oh my gosh, that's so weird. It's almost like there's a reason I use certain moving averages, unlike, random people out there that just like pick a random number, can't explain why they pick that number, and then name it after themselves. So the reason we use these important Fibonacci numbers and moving averages is because when you change your time increments or how you're looking at things, it still corresponds accordingly. So we see the bull cross here on the daily now has happened, corresponding with the 4-hour bull cross and then reclamation of the 200s and the slope flipping positive. So now in the daily, we should arguably be long. Now, the last time this happened, it was immediately rejected and went to a new low. So could that happen again? Of course. Of course. Definitely could. The time before that, we had a pretty nice run up. A few $1,000 right here. 15% or something like that. Really nice on something like Ethereum, like 70%. Even XRP rallied up to its 200 exponential and simple based on, anti-FUD or whatever. They're winning their court battle. Hooray! Whatever. It's all bullshit. I hope everyone knows that. XRP is trash. But anyway, even it bounced up here. So even XRP is less trashy in the last couple months than Bitcoin, because Bitcoin couldn't even get close to its 200 exponential and simple. But in order to get up there, the 8 and 21 need to have a bull cross. So step 1, check. Bunch of green histograms above the red slope line, above the 0 line. Well, that's a good sign, right? Bull cross leaving the bearish control zone. Stoch's powerfully angled to the upside. It's a good, good sign. So everything we need to do, we've had some bullish divergence here. We got a bull cross on the 821 daily. Some good signs right here for a potential rally. Now, can it immediately just get rejected and immediately go down to 18 and then immediately 16 and then 14 and then 10 and then 0? Sure, it could. Or, it could wake up tomorrow and we're at 28K. So we got to look at the risk reward. At this point in time, we go sideways long enough. Can't really trust a lot of our, indicator oscillators. Like, they start to give us false signals or cross up, cross down, just fake outs, etc. So we'll see what happens. Starting to see some bull signs on Bitcoin. There's a reason obviously to be long from this level, short term. Again, looking at that 18K level as support, looking at, 25K or arguably, 20. There's a lot of resistance above our heads. You say 25K, the previous high right here. You say 26.4 or whatever, the 200 exponential. You say 28K, this previous support right here. So you just got level after level after level of resistance to try to break through. So I'm just looking at it as a range for now. As long as we're not taking out the lows, we're probably going to backtest the 200s. Once we get up here, I'm going to take profits and then see what the price action does. We do see the stochastics crossed down on the weekly and then actually averted that cross so far. So the recent bullish action has stopped that cross. That's fine. It stops us from going into the bearish control zone. So remember when we were talking about, the defense of the 20 level? This, in my opinion, is the bulls defending the 20 level, trying to keep us out of the bearish control zone, trying to stop that bear cross, trying to stop the loss of these moving averages, which is what you would expect. Because if you're still bullish on Bitcoin, whenever we hit support, you would be thinking that's a great buying opportunity right there at support. So then our monthly, we're in the bearish control zone. We have all red histograms. We have red slope line. We have the 8 and 21 bear cross confirmed. And we have, 1.5 wicks and a candle holding us up. If we lose 18K, pretty much quick drop to 14K, trapdoor. Bears are clearly in control. And for the last, arguably 3 months, the bulls could not get us any higher up than that 23K level on a close. The bears could not get us any lower than that 19K on a close or 20K. So again, I would just assume there's a strong incentive that it stays in this area until, the battle really rages. And obviously that would correspond with some kind of volume. We don't have any volume now. This was the volume here, pretty epic. This was the volume here, pretty epic. There's no volume. But obviously no one cares about crypto right now because it hasn't been going up for 6 months. Once it's been going up for 6 months, people will be like, oh yeah, that Bitcoin stuff, I thought that was a scam, but I might take a look again. Ethereum on the daily. So holding that higher low, very, very good. Still a little ways off of the bull cross on 821, a few days away. Some clear resistance around this 1423 level. Hard buy coming out of the bearish control zone. Stokes angle to the upside. All green histograms crossing over the slope line, trying to cross the 821 up. So Ethereum, again, has a lot of resistance all through this level. So, again, it's just going to be busting through one level of resistance or previous support after another. And then eventually maybe tagging the 200 exponential and simple. We could put in a lower high now and still, bust our nut right here. Finally get that 200s. Because the market still wants to get the 200s. The bots and algos are trying to hit those 200s. Because that's take profit. And here, a lot of people were expecting to take profit at 200 and didn't. We took profit a little early. Some people took profits too late, aka they just rode this straight back down. So they're still looking to take profits up here at the 200s. Even though now it's at a lower level, still possible we get up to that level. So definitely worth paying attention to. Total market cap, obviously just hanging on to 200 simple for now. As long as we're in this range, as long as we're above 885 or whatever, and below 1.13 trillion, we're just range bound, doing nothing. Looks like the Bitcoin chart. Slightly better. Bitcoin dominance with everything hanging out at the lows. Bitcoin is slightly strengthening. No real confirmation of the trend yet, but it looks like Bitcoin's going to try to move up here. Hard buy signal, blue slope line, bunch of green histograms above the zero line. 821 trying to get a bull cross, threaten that 47 level again. And let's see how that corresponds right here. We talked about the potential for a situation where the dollar goes risk off. How is that going to reflect in the markets? Okay, so previously, some of the weakness in the Bitcoin dominance chart came from people being in dollars or digital dollars or, dollar-backed currencies, et cetera, aka stablecoins, crypto stablecoins. So some of the apparent weakness in Bitcoin is actually just strength in stablecoins or people speculating on the dollar. So as we saw a sell-off in the dollar, how did that correspond with this chart right here? Well, Bitcoin continued to strengthen in comparison to altcoins. As we're here, Bitcoin strengthened a little bit compared to altcoins, but not nearly as much. So we still see that people are confident in their stablecoins, in their dollar speculative assets, or de-risk from the actual cryptocurrency market, whichever one it is, combination of the two. Some people are speculating on USD. Obviously not anyone that lives in the United States, people in other countries, and it's a very easy way to do it digitally at very low or no fees. Some people are speculating on, Bitcoin. Some people are speculating on alts. This is just our balance. So now when we take out those stable coins and we say, okay, there's still some people speculating on the dollar. We have seen the dollar sell off pretty aggressively. Why hasn't either Bitcoin gotten a bunch more strength right here or altcoins gotten a bunch more strength right here? Well, either people don't believe in the dollar sell-off or people don't believe in the crypto rally. I don't know which one it is. You tell me, but this looks strong to me. It looks like Bitcoin is getting ready to gain market cap compared to the altcoins. We have a series of lows down here, and then we have a couple higher lows. Obviously we have a high right here. So we have our lows, then we have a high, then we have a higher low right here. Now we're back above the 821 trying to get a bull cross again. It looks like Bitcoin wants to strengthen compared to shit coins. Now, stable coins, that's maybe not necessarily the case. Kind of is, but it's not crazy. So if we see dollar weakness, that would translate to Bitcoin strength and theoretically altcoin strength as well. So why would dollar weakness be strong Bitcoin but weak altcoins? You would think it would be the other way around. The dollar goes down, risk on. Therefore, people are speculating on Bitcoin and people are speculating on altcoins. Therefore, altcoins should be gaining market cap compared to Bitcoin. That's not what we're seeing. So somebody doesn't believe in this risk-on environment. Lots of people, as a matter of fact. And that's what we're seeing reflected in the relationship between Bitcoin, shitcoins, and stablecoins. All right, so on to gold. So XAU. So we recently saw some nice bounces in gold. A nice little attempt for a bottom, maybe. I don't know. We obviously saw some clear bullish divergence taking place from our previous low right here and here as well. Hard buy signal coming out of the bearish control zone. We're going to talk about silver in a second and, do the rundown a little bit more there. But obviously this corresponds to the same move in silver. We have a descending channel or broadening wedge or whatever you're looking. break out of it, get the measure move, back test resistance. Do we get up here again, retest it? If we do we put in another lower high? We'll have to wait and see. So silver, so we put this one up quite a while ago, and obviously exactly what we said happened. We came back up to that resistance again. We closed here. We anticipated the breakout. Obviously that breakout took place. We just got one big candle, and that was half the move already. So we made it up here to 200 exponential. We obviously have a little ways still to 200 simple. We have a little ways still to the measure move. But this our take profit. So we were literally within, 21.27 was the peak, and we had the take profit starting at 21.64. So the majority of the move already played out. Now, I do think we likely get more continuation on this. Above the slope line, above the zero line, green histograms, hard buy signal, bull cross happening right now in real time. Still very bearish on silver and gold long term based on the price action. But, this is a nice move. Very, very technical. Very in line with what we expected. And then obviously we talked about how this would correspond with our miners, including the junior miners, and how they were telling us a different story than what the underlyings were telling us. As the miners were extremely weak, underlying was, looking like it was trying to break out to the upside here. And then we see how that has corresponded with like GDXJ and obviously SILJ as well. Some nice moves off the lows. Now watch out, because you're going to have some Peter Schiffs out there talking about how, silver juniors just went up 12% in a day, not talking to you about how they're down 68% this year. So you're like, oh, you're up 12%. Look how amazing that is. But really, you're just down like 64% now instead of 68. So, don't start like calling it a victory just yet, Petey. Little Pete. But when you're wrong every day for like years and decades, when you are right, you should be able to rub it in everyone's face. See, I don't really rub it in people's face that much, but we get to be right like every day because we just use the technicals and trust the charts. So when we're wrong, it's like, oh, guys, sorry, I was wrong on Monday's stream or Sunday's stream or whatever. Like, we were wrong for 2 days. It sucks, right? Nobody ever comes out and is like, yeah, I know I was wrong for the last 9 years, but look at me now. All right, so GSG, again, we're using this one to kind of gauge commodities and energy and the blend between. So we broke down to new lows through that key support, through the 200s. We're back testing them now, immediate back test, trying to avert the bear trend. We'll see what happens. Obviously, this area is sketchy. Anytime this is happening right now, there's a battle going on right now between basically distribution and accumulation, between the bulls and the bears, between the bull trend and the bear trend that could potentially happen right now. Whoever wins, we likely see a bunch of, price action in that direction. We just don't know which one yet. So you look at fundamentals and you can make a strong case for commodities going up in price. If you look at fundamentals, you make a strong case for commodities going down in price. So it's like, are we going to go back into a boom and prices are going to go up on real goods? Are we going to go into a bust and prices are going to go down because everybody's struggling? You can make a strong argument for either case. And this chart right now is not giving us any clues. So we'll wait until it does. LNG, very strong. Back up here at the highs again. So obviously this is Cheniere Energy, but a strong LNG player. We do see some pretty clear divergence here. Slope flip right now. I have a feeling this is getting ready to top out and roll back over. I'm not expecting a big move back down. But something like a retest of a 200 exponential and simple. We'll see. If we chop through this area, though, we could just start ripping. I'm not convinced that's what's going to happen right now. We'll have to see. We will have to see. There's a lot going on in the energy department right now. And literally anything could flip on a dime. I think the majority of the risk on energy is to the downside right now. If we start to break back up, if it starts to strengthen again, it's going to be a long trend that lasts for a long time. So if you're a little late to the party, I don't think it's an issue. If we decide to fall out of bed, especially on like nat gas or oil again, we could be talking about a big move down. Obviously, OPEC cut supply, and all this stuff. But, what people don't realize is this, like, they cut their targets. They cut their supply targets. They're like, oh, we're going to produce this much. And then they don't even meet those targets. So if I tell you I'm going to get, an A+ on my test, okay, and then I bring home an A+, I was right on my target. That's great, right? So if I tell you I'm going to get a C, and then I bring home a C, I was right on my target, right? But they're obviously not the same outcome. One is an A+, one is a C. So what if I tell you I'm going to get an A and then I get a C? I'm substantially underperforming. Substantially underperforming. And that's what OPEC is doing right now. They're saying we're going to produce this many barrels per day. And they're like, but we're not actually able to get that high of production. So we're substantially underperforming. So I know we said we were going to get an A on the test, but we're getting a C. So what happened now? What happened now? What changed? OPEC's like, we're going to cut our supply now. So there's going to be less available potential barrels on the market. So where does that get cut off of? It gets cut right off the top of the supply that was not getting produced. So they were underperforming. So they're like, okay, look, we're going to go ahead and rule out getting an A. That's not even a possibility. There's no way we're going to get an A anymore because we can't get to those targets. We were trying to get an A. We couldn't do it. Sorry. So we've been getting a C. I know. Now we're going to cut supply, potential supply. And you're like, okay, so you're going to cut it down to C? And they're, well, no, we're cutting it down to B. And you're like, yeah, but you're getting a C. So if you said you were going to get an A and you got a C, and then now you say you're going to get a B, if you're still going to get a C, it's still a C no matter what. That's what OPEC's doing right now. They're like, oh, we're not going to make as much oil potentially. And you're like, well, how much is your actual barrels a day going down? And they're like, well, it might not even go down at all. We might not actually make any less oil, but we're going to not potentially make as much oil, even though it's unrealized potential because we can't even meet our supply goals. So think about the irrational moves and just unintelligent people speculating on these things based on these type of moves when they don't even truly understand them. So you're like, oh, okay. So you're not shooting for an A anymore. Now you're shooting for a B. What'd you get on all your other tests you've ever taken? Oh, you got a C on all of them. And now, okay. So I believe you're going to get a B now, or you'll probably just get another C. So OPEC cut oil supply. No, they didn't. They didn't. So anyway, mosaic. So looking at a little fertilizer gauge right here. We got a high, we got a low, we got a lower high, we got a higher low. We got a consolidation, a triangle, some sort of decision pattern, coiling up like a spring before we pick a direction. What direction will it be? Fuck if I know. If you know, let me know. Save a lot of trouble. And then uranium space. We got a high, we got a low, we got a lower high, we got a lower low, we got a lower high. We're hanging out around the 200s. I would expect another lower low. This is URNM, the Sprott Uranium Miner ETF. It looks pretty similar to most. I think this gives a pretty accurate gauge of what you could expect. Again, just deciding. I mean, we had a parabolic uptrend. We entered into a bear market. We're in a descending channel. Looks like we're confirming the bear trend, and we're just going to roll back over and put in new lows. Now, if we start consolidating here, we take out this high, consolidate here, take out this high, consolidate here. I mean, by all means. But we'll see it happening in real time. So we don't have to FOMO in right now, hoping that it goes higher. We just wait, and then we just take the easy stuff. Wait till we see that bag of money sitting in the corner. We're like, hey, is anybody using that? No? That's nobody's bag of money? I'm going to take it. Last chance. Anybody? Is this anyone's bag of money? No? Okay. I'm taking it. I'm putting it in my pocket. I'm walking outside. I'm getting in my car. Catch you guys later. That's my trades. That's the ones I want. Don't overcomplicate it, guys. Trade with the trend. Look for, obviously, probability of success. Make sure you look for the risk-reward ratio. Obviously a favorable risk-reward ratio. So if we win and lose an even amount with or without a slight edge on the market, we still win over time by taking, 2-to-1, 3-to-1, 5-to-1, 10-to-1, 50-to-1 trades, asymmetric risk-reward returns. That's a huge edge. And then obviously, if you want to keep playing the game, you can't go all in. That's another one. Peter Schiff. I like Peter Schiff. And, I like Bitcoin. I like gold. I like stocks. I like all these things. So for me, I don't join these cults. So when the cult leaders come out and talk, when Michael Saylor is out or Peter Schiff is out or, whoever else, some random Canadian talking about why the dollar is so bad comes out, I can still listen to and respect their opinions, but I'm not biased because I didn't join the cult. I don't have a vested interest in that cult. I might have financial interest in it, but I'm not like a hardcore dire member that has to be blinded by their faith. So that gives us a huge, huge advantage on these markets. Huge advantage. So, but if you go all in, like Peter Stiff said, recently, it's time to go all in on gold and silver and all this. Well, what if it does blow up? What if the trapdoor does fall out? That's it. You blow out your account. You're done. So that's why we use position sizing as our third key metric for, success in these markets. Because you could be wrong 2 times in a row. You could be wrong 3 times in a row, 5 times in a row. You might even be wrong 10 times in a row. Shit, I've had some stints where I was wrong 20 times in a row. But you're not going to be wrong 50 or 100 or 1,000 or 10,000 or 1,000,000 times in a row. So if you don't have correct position sizing and you go all in on some trade or half your account or a quarter your account or 10%, whatever the unrealistic position you take is, it can blow you out with a bad string of luck. But if you take 1,000 trades or 10,000 trades or 1,000,000 trades, the probability of bad luck hurting you is not very high. You might have a bad stint along the way, but you're not going to blow out your account. And that's what really matters. If you have fun playing the game, if you like making money, if you're here practicing and learning and getting better at it, well, the key is don't lose your life. When you're playing a game, you got to have lives left so you can keep playing. So don't lose your life. What's your life? That's your investments, your account, your portfolio. So that's it. Bear market. No signs of an end so far. I'm not expecting any big, massive pivots or anything like that. I'm not seeing anything change fundamentally. I'm not seeing anything change technically. We're seeing some signs of some beginning of some changes. We're speculating on a little, crypto long position. We're speculating on a little, and you're like, well, that doesn't make any sense. How can you be long crypto and short Apple when obviously crypto and stocks trade together? Well, if I'm wrong in my crypto trade, I'll be right on the Apple trade, which is already massively profitable. I took profits on. And then if I'm wrong on the Apple trade, I'll be right on the crypto. So why wouldn't? That's the best trade. We got amazing Apple entry short. We got a great, crypto long. We win either way. Win either way. And that's the key. Be right and win. Be wrong and win. Be bullish and win. Be bearish and win. Even if you're bullish or bearish at the wrong time, if you figure out a way to still be profitable, you can do real nice in these markets. So that's it for today. Hopefully everybody enjoyed the stream. Appreciate everybody tuning in today. Call my Betty. What's up, man? The crash is coming. Yeah, the floor could just drop out literally at any second. But the market is looking for a reason. It's looking for a reason. And in my opinion, markets don't bottom when everybody's looking for the bottom, trying to buy the bottom. And markets often don't give you countless attempts to buy the bottom. So, but that doesn't mean we're not going to see some further upside. So, if we're back here a week from now and Bitcoin's at 28K, are we going to be surprised? No, I think what will surprise us is how many people will be bullish now once we're at 28K that we're not bullish at 18 or 20K. And then vice versa. Once it starts melting down again and we're putting in new lows, everyone will be very, very bearish again. They're always on the wrong side of the trade. That's why markets are so beautiful. You figure out how to not be the sucker, that's how you start making money. If you can't figure out who the sucker is you. That's that old one, that old poker one. But that's it for today. We're going to wrap it up there. It is 9:09 p.m. Eastern Standard Time on Wednesday, October 5th, 2022. And as always, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But that's it for today. Everybody have a great week. See you guys for the Friday morning market wrap-up at 11 a.m. Eastern Standard Time. Going to be exciting. Should see some sort of either continuation by the end of week and a nice bullish close, or rejection and, start threatening those lows again with a nice bearish close. What's going to happen? We don't know. Obviously, this next 3 months, we're going to see some serious volatility going into the holidays and year end. So stay tuned. Keep sharpening up those tools and educating yourself. I know you guys do. Appreciate each and every one of you active in the community, watching, liking, subscribing, all that good stuff. And of course, all of the members as well. That's it for today. Crypto Trend Trader. I'm getting the heck out of here. Peace.